All right, so what I'm going to go through here is just this checklist of items that that you get when you join with us, or even when you just sign up for the trial, things you just should know overall. All right, so first of all, the charting platform. We're going to go with TradingView right here. This is a free charting platform. I'll show you how to get it right now. All right, and that is what is running behind the scenes right there. But to get TradingView, go to TradingView.com. Now, don't click Get Started right here. Just go over here to Products, click Chart Plus. That's going to bring up a random chart like this. Okay, this is Apple. Click on these little things right here. You see these three lines? Click on that. Go down to the bottom where it says sign in. Don't hit join now. Hit sign in. Okay. In here, it's going to say all this information. Right down here at the bottom, don't have an account, sign up. Click that. Okay. And what that's going to do is bring you to this. All you need is an email. Click on that, and it's going to prompt you for a username if you want to create your own. Your email, your password, check these boxes, click create account. It's going to send you a confirmation email. You have to check that confirmation email. Once you do that, then you will be given an ID. Now, the ID that you are given is what you need to send to us so we can enable the indicators for you. But that is how you get a charting platform. As easy as that. I mean, you have this charting platform right here. Now, when you first start out, you won't have access to right down here will be invite only scripts. All right, you won't have access to that. You'll have access to all of this stuff, but you won't have access to our stuff. So what you have to do, you're going to be assigned an ID. All right, they will in here. Then when you go to sign in, like this is the ID that we chose. All right, you'll be assigned an ID. That's how you use TradingView. That's how you get to TradingView anyway. That's not how you use it. All right, once you've done that part, then you will have a chart like this, okay? And then when you go to indicators, once you give us your ID and we enable things for you. Hang on, I got to sign back in, I think. Once you give us your ID and we enable things for you, then you will have access to invite only scripts like these down here. All right, you click on that, and these are the indicators that we give to you for your trial period. You click on TIQ price panel and you will get all of these indicators right here. TIQ Slingshot, you'll get this down here, and TIQ sidebar, and you'll get the paint bars that are on these indicators. Now, I made it so that you don't have to click on all that. I mean, if I get rid of this and get rid of this, and we do it all together right now, we'll go to indicators, invite only scripts. I'll click on sidebar one time, puts all that on, and Slingshot one time, and it puts all that on. That's all you need. Right, and you can see these are active moving markets right now. This is the mini S&P 500 7-tick range bar. Now I'm going to get into what all those things mean right now. Okay, so the first thing was the trading view. The next thing that I want to talk to you about is weekly trading zones. What they are and how they are used. The weekly trading zones are zones that are going to be given to you. This is what it looks like, okay? For each one of these 9 markets. Right now it's 9 markets, that number can change. But the primary markets are going to be these right here. All right, and they're given to you Monday morning, every Monday morning, and there's zones like this right here, 3483 to 3482. That is a 1-point zone on the ES that the market is going to be attracted to. Now, we have different ways for you to put these onto your charts, but they're there for the entire week. Okay, the market's attracted to those zones, and they're places where you shouldn't trade, places you can use as targets. You'll see how you can use them for triangulation and lots of other things. But they're great to have, and we'll give those to you for free right at the very beginning, okay? For a week, I think. But that is the weekly trading zones. Now the next, what markets are these? Well, the primary markets that I trade, I mean, you can see on the weekly trading zone example that there are 9 different markets here. This is the mini S&P, the Dow, the Russell, the crude oil, the gold, the NQ, silver, the euro, and the 30-year bonds. All right, those are the markets that are in the zones. The ones that I primarily trade are right here. I'm going to do the ES, the gold, and crude oil. That's what you're going to see me doing in the morning session. All right, that is another piece of what you get when you start out with us. All right, what types of charts are these? I use range charts. All right, now what that means is this is a 7 range chart. What that means is every bar is 7 ticks high. All right, and every one of these charts is a 7 range chart. So every bar is 7 ticks high on every one of these charts. Okay, every single bar is 7 ticks high on every one of these charts. And you see some of these arrows here that are pointing up and down. Those are things that I'm working on, and I'll tell you about those in the future. But for right now, this is what you get. All right, and there's 7 tick range bars, and I use the same time frame across all the markets. So you're dealing with the same set of indicators, the same time frame, the same trade setup, the same everything across all the markets. Okay. I just did types of charts, what time frame. Are there others? You can do whatever time frame you want. Now, this is the 7 tick range bar. If I wanted to do 30-minute bar, it's all the same stuff. You're getting all the same indications. You can choose however you want. The difference is going to be the risk management, how much risk you need to apply. And when I say risk, I mean how big your stop has to be. And for those of you guys who are brand new, when I say stop, when you put a trade on, we have predefined risk. That means the maximum amount that you're going to risk per trade. All right. And the larger the time frame, the more risk you're going to have. So I like to keep the time frame pretty small, 7 tick range. So then you're only risking about 9 or 10 ticks on every trade. All right. So depending on what market that is, that has a different value. But for like the ES, 8 ticks is $100, 10 ticks is $125. That's per contract. Okay, that's the maximum that I'm going to risk on any trade. And crude oil, 10 ticks is $80, and gold, I'm sorry, 10 ticks is $100, and on gold, 10 ticks is $100 as well. Okay, that's the maximum I'm going to risk on any trade as I get into it per contract. All right, that is why I use this time frame. Okay, what charting platform is this and other others? This is TradingView, as I said. There are other charting platforms. There are several other charting platforms. NinjaTrader is one of the larger ones, but anything that clears through Gain Capital, we have 12 different charting platforms that clear through Gain Capital that we have our indicators on that you can use. What are these indicators? Well, I just showed you which ones they are that you get with this. There's the TIQ sidebar, the TIQ price panel, and the TIQ slingshot. And the sidebar contains the price panel for the most part. There's one thing in it that it doesn't contain. It does contain other things that the price panel does not contain. So if you just go with the sidebar one, it contains pretty much all you need. And the slingshot is the slingshot. Again, the slingshot is one down on the bottom. Now I'll get into what these indicators are indicating here in just a minute. Well, basically right now, one of these indicators, that's what they are. BBC, the bull bear cross, that is the primary line for the ribbon particularly. The thick line right here is the BBC. If I show you what this looks like just all by itself, there, and I'll shut that off too, the MA one. This is the BBC all by itself. That stands for bull bear cross. Now it's bullish when price gets above it, and it's bearish when price gets below it. All right, now it changes color based upon the slope, right? And when you add to it the ribbon, which is a significant part to help determine trend, and now we're stepping ahead here in my list, but trend, higher highs and higher lows defined by the spread and the color of the ribbon. Okay, when you add to it the ribbon, I'm going to discuss that right now. That's why I checked it off. You add to it the ribbon, which are these, and they are on by default. When you can see all the lines in the ribbon, all 4 lines in the ribbon is red, you're in a downtrend. When you can see all 4 lines in the ribbon and the ribbon is blue, you're in an uptrend. Okay. When it's all bunched up like that, you don't have trend. You want to trade when you have trend. Limit your trading to when you have trend. Right? This is a clear and easy way to define the trend. A huge move like this, I will show you how to define that. That was a huge move this morning at 8:30. We must have had some news come out at 8:30. That is how you define the trend. Okay. The bull bear cross, that was the BBC. The slingshot, the lines in the slingshot. And we go through a couple of them here. Now the slingshot is lines in the oscillator panel below. This is a slingshot down here. If you see down here at the bottom. The S3 cycle, that is the red and blue line. The S1 fast is the green line. Now, let me check these off and I'll explain how to use those quickly, all right, relatively quickly. What you're looking for is to have separation between these two, to have the cycle be red and below the green line, or the cycle be blue and above the green line. When you have that coupled with the trend, then you have a great opportunity to place trades, all right? Now, the 2-step method, I'm going to get to that in just a minute, but It doesn't include the slingshot. The slingshot is built into it, but it does include the color of the bars, okay, and the ribbon. All right, so the paint bar is the color of the bars. Now, let me show you what that means. All right, if the bars are red, that means that the MA1, which you do not see here on price right now, I'll put it on for you. The MA1, which is this red and blue line right here, is the same color as the cycle. All right, they're both red. The MA1 is red and the cycle is red. If the bar is red, if the bar is white, that means the MA1 is red and the cycle is blue, or the other way around. The cycle could be red and the MA1 could be blue when you get a white bar. Okay, if they're both blue, you're going to have a blue bar. If they're both red, you're going to have a red bar. That indicates, actually it indicates a lot of stuff, but if they're both red and price touches the BBC, that's the two-step method, okay? So it does everything with the colors. Now I'm going to take that back off because you don't need that for any of the decision making. And really for the decision making, you don't need the slingshot either. But again, with the slingshot, if the cycle is red and below the green line, then that is bearish. If the color on the bar is red, that is bearish. If the slope of the BBC is red and you can see all the lines, then you're in a bearish trend. So you have all these things indicating only to take short trades or to sell. And the other way around, if it's bullish, all these things indicating take a long trade. So those are a bunch of little things. Now, you don't need to think about all those things. All you really need to think about, the two-step process, is if the color is blue and it hits the blue ribbon, and all the ribbons are there, you can see all four ribbons, then you want to buy. Now, these are 7-tick range bars. So this is the ES. If you bought right here at, let's say, 68.25, and the entry time would be 8:34, you bought at 68.25, it ran up to 74.25, and that was also 8:34. So from 8:34 right here to 8:34 right here, no less than a minute, that's $300 per contract right there. And that was just a few minutes ago today. What time is it right now? It's 8:45. That was just a few minutes ago today. So you could have made that trade this morning. When the colors are the same, you take the trade. That's it. It's as simple as that. See, this one right here didn't hit the BBC. That's when you can bring in the other things if you want to, if you want more trades. All right, and I'll explain all that some other time. But for this, all you have, the two steps. Is it blue? Can you see the ribbons? Bang. You enter the trade. Okay. Is it blue? Can you see the ribbons? You enter the trade. Is it red? Can you see the ribbons? Let's find one of those. You can't really see the ribbons right there, and it wasn't really red. But that's all you'd be looking for. All right, you can see we had this huge move here this morning. That's what's kind of messing things up a little bit. But if you were to use the slingshot and trend lines, then you could have jumped in all of these trades this morning too. So let's go back here. Let's go back here to my checklist. All right, stop. Now every trade has, I think I said this, every trade has a defined risk. When you put a trade on, for instance, hold on, let me get a DOM up here so I can just show it to you. When you put a trade on, every trade has defined risk. Now I'm going to show you this on this one. Down here at the bottom, the stop is set to 8 ticks. Okay, now I'm going to bump that to 10 for these trades. So whenever I put a trade on, if you look at this, where I hover over here on the green side, that is where I would buy. Okay, and this is where my stop would go. So my risk is automatically set 10 ticks below where I'm going to buy. So the maximum that I'm going to lose on any trade is going to be this. Now, of course, I'd be looking to gain money. I wouldn't be looking to lose money. But that is the maximum. And the risk is set on the DOM, and it's predefined before any trade goes on. Okay, that is how you do that. Let me take this off before it actually executes and end up in a trade I didn't mean to be in. All right, now a trailing stop. This is another thing that you can use the slingshot for, okay? What I do when I get into a trade is I watch, let's use an example. Like here was red off of red, where you could see all the things right there. Okay, you can see all the lines, red off of red. This was blue off of blue. This was red off of red. How easy is that? 2 steps, right? When you get into a trade, when the green line works its way down into the cycle in the slingshot, it's time for it to pull back and do it all over again. Conversely, when it goes up into the cycle, it's time for it to pull back and do it all over again. Okay, pull back and try again. And that's what it does again and again and again. When the green line gets down into the cycle, it pulls back, gives you another entry, gets back down into the cycle, it pulls back, gives you another entry, gets down into the cycle, it pulls back. All right, so you trail your stop accordingly. As the green line approaches the cycle, you want to trail your stop very close to price. I typically don't put targets on my trades. Okay, I don't put targets on my trades on purpose, because a lot of times you're going to get into something like this craziness that happened here at 8:30. You know, you get into a trade like this where you go short right here, and the reason to go short right here was it was a trend line trade. The bars were all red, cycle was red, everything was saying it was going to go short. You had bearish separation down here in the slingshot, closed below the trend line. You could have entered right here at 38.57, and this is at 8:30, at exactly 8:30, and this is still 8:30, and it dropped from all the way up here at 57. That's all the way down here. We'll say to 90. Let's just say it dropped all the way down to 97. Okay, 57 down to 97. That's 60 points. That's 60 times 50. Do the math. That's $3,000 in less than a minute per contract. It's you know, the money is there if you know what you're looking for, and the opportunity is there every day. You can see right here, there was some right here, some right here, and what we want you to do, what we want to teach you how to do, is to be consistent. Right, to see opportunities like this one and this one, and just wait for those opportunities to happen. The highest probability opportunities, just wait for them to happen, and when they do, just take advantage of them. Right, be right on top of it and take advantage of them. I mean, everything is color coded. You can see it coming ahead of time, and you know where the bars are going to close because they're range bars. Let me go over that one more time. They're range bars. So if you know the high is, you know what the low is going to be. If you know what the low is, you know what the high is going to be. There's 7 ticks high. Right? I know that this bar, well, these are moving really fast, but if you were looking over here, if you were looking here, like right now, the open of this bar is 60.75. So the high of that bar, if it were just going to go straight up, could only be 7 ticks higher. Okay. And like if the low of this bar here, let me just look at it over here. Because the low of this bar was 52, I know the high can only be 7 ticks higher than that. All right. So what I would do is put a buy stop 8 ticks higher if I were thinking to go long. All right. It's as simple as that. It's just math over and over and over again. Same stuff. All right. Now this is another charting platform in the background that I use. All right. So down at the bottom here, the bottom thing down here is there a track record? Yes, of course there's a track record. Now I got to say this about the track record. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Now, this spreadsheet goes back to January 2nd of 2013. All right, it's got daily results every day going back to January 2nd of 2013. Now, this is this month so far this year. Well, this is this month, and then it goes down to show the year too at the bottom. Right now, yesterday, that was our daily results. The day before that was right there. The day before that was right there. The day before that was there. And the day before that was there. This is in here. I show how long it takes me to get my goal, how many trades, and the number of minutes, and what I was actually at when I closed out that trade. So yesterday, for instance, it took 6 minutes and 5 trades to get to the goal for the day. At that point, I was up $150 a contract. Now, for one contract, that doesn't seem much, but it is $150 in 6 minutes. But with one contract, people that have been trading for a while might say, oh, well, that's just $150 and it's just one contract. But if you add one contract a month, that was $1,050 in 6 minutes. If you're at 7 contracts right now, for the 7th month. And all that information is down here. Now I've gone 191 days since my last negative day. Those are business days. I've gotten my goal on 130 out of 130 days so far this year. Now, the thing about the goal is you have to set a goal that is achievable, something you can achieve every day. And that's what we want to do. We want to teach you to trade consistently, trade profitably, and make goals that you can reach every day. Okay, if you can do this again and again and again, then that's all you need to know how to do. You can stop looking. All right, that is everything. I believe my checklist is done. If anybody has any questions, you can email us, support@mytradingiq.com. That is it for now. Thank you.